Hey guys, on this video, we're just going to talk about dividends versus growth stocks. What's the difference? What are the pros and cons? Which one is the right one for you? Should you invest in one or the other? And what is the right vehicle if you are late to catching up for retirement and you're trying to do everything that you can so that you can retire with dignity? Hey guys, if you are new here, my name is Susan Velez. And on this channel, we talk about making money, saving money, investing money, and taking care of our health so that we can catch up for retirement, especially if you are late to saving for retirement like me. So guys, before we get into all the gist of dividend stocks versus growth stocks, what they are, let me tell you guys something. I am not a financial advisor. I'm just like you guys. I'm a retail investor who started investing late and is trying to catch up for retirement. So don't take anything that I say blindly. I just share with you guys my opinions, some research that I've done, and what I'm doing. And also make sure you watch till the end, guys, because I'm going to share with you guys how I invest in both dividend and growth stocks to help me catch up for retirement and also fund my retirement when I get there. So what are dividend stocks and what are growth stocks? So I'm going to share with you guys the meaning that I found online by Smart Asset, which is a website online. And I just want to read to you guys what they say. So what are dividend stocks? It says the difference between dividend stocks and growth stocks is based on how much you emphasize each asset's return and how the company behind each stock plans for long-term growth. A dividend stock is one that emphasizes regular dividend payments instead of the asset's share price. As an investor, you plan to make the majority of your return off of these regular payments. Ultimately, when you do sell the stock, it will be a nice bonus if the price has increased and you make some money off the sale. However, by then you'll have made the returns you planned for. Dividend stocks are defined by the behavior of the underlying company. Here, the company behind the stock generally uses its profits to pay returns to shareholders. Again, this doesn't mean the company exclusively uses its profits to pay shareholders. However, it emphasizes dividend payments in its corporate strategies. So what does all that mean? So all that means, guys, is that you're investing in either individual stocks or ETFs that pay dividends. All these companies, if you're investing in an ETF, is filled with a basket of companies that pay dividends. So when you're looking for dividend stock, that means that you're getting a return on your investment in the share of dividends, and these are usually paid quarterly. You can find some that are paid monthly, but for the most part, most people invest in those that are paid quarterly. I do have a couple of dividend ETFs like SCHG and DGRO, and these companies pay quarterly. So how it works is if you're investing in individual stocks, you want to make sure that you're investing in a company that has been known or has a good track record of paying dividends. And you also want to make sure that they don't have too high a yield. I know when I got started investing in dividends and chasing dividends, I was chasing a high yield. But whenever a company pays a high yield, chances are that company is not going to be able to sustain that, especially if we go into a recession or the economy gets bad. And it also shows that companies who are paying high yields are not really reinvesting their money to grow their profits. So you want to make sure that you stick with companies that have lower yields because those are the safer ones that you can invest in. So now let's take a look at what or growth stocks are. It says a growth stock is one in which you emphasize growth in the stock's share price over any other consideration. As an investor, you plan to make most of your money by selling the stock in the future. This form of profit is known as capital gains. It's a nice bonus if your stock also pays some dividends along the way, but most of your returns will come from the growth in the stock's price. With a growth stock, the underlying company generally chooses to reinvest any profits in the business itself. By doing this, it leaves relatively little money left over for investors, so dividends tend to be minimal. However, this reinvestment does tend to grow the value of the business over time. This in turn increases the value of the company's stock. So just like it says, guys, whenever you invest in growth stocks, you're investing in companies that are growing. They're spending most of their money, if not all their money, to keep growing. So that way that company continues to grow. And if you get in a good entry point, then later on down the road, when you need that money, you sell that stock for a profit. And guys, you have to remember that the amount of money that you make on that stock is going to vary depending on the entry point, your entry price level that you pay, and then how the profit has grown for the company when you are ready to sell that stock. But you don't lose any money or make any money until you actually sell the stock. So if you are investing 100% in growth stocks, then you're going to want to make sure that you get a good entry point. And of course, there's nothing you can do about the market, but you're hoping that the market is doing well when the time does come to sell. So now let's go ahead and take a look at how do you choose which one to invest in, because according to statistics, there are certain criteria to consider. But guys, like I say, personal finance is always personal. So when people say that you need to choose something based on your age or based on statistics or whatever, I think that choosing which strategy is right for you is going to be based on your personal finance, your decisions. So I'm going to just read to you what Smart Asset has to say about it, and then I'm going to share with you guys what I'm doing. So it says, while every investor needs to judge their own needs, dividend versus growth investing generally can meet a few overall profiles. So the first one being risk. Growth stocks tend to be higher risk than dividend stocks. In part, this is because with a growth stock, you are specifically seeking volatility. You want the stock's price to change so that you can sell it for more in the future, in the long run, but those fluctuations can cut both ways. Dividend stocks tend to be lower risk than growth stocks. Companies which pay dividends tend to be well established, so their payments tend to be steady and reliable. But dividend payments tend to be smaller than the money you'll make off capital gains. And by sharing their profits instead of reinvesting them, these companies reduce their potential for stock price gains. You can generally make more money off growth stocks, but with higher risk. So what that's saying is that with growth stocks, you're going to make more money over the long run, because most dividend paying stocks, even though they pay you a dividend, chances are that company is not growing. And one example is, guys, that I have is Verizon. While I like the dividend, it's a good paying dividend. It pays every quarterly. The Verizon stock itself has not grown. Now, another dividend stock that I have that has done really well as far as growth and dividends is Abby, which is a stock that I have. But for the most part, guys, I don't recommend investing in individual stocks. Personally, I'd rather purchase an ETF, and I do have a couple of ETFs that pay dividends, but just know that chances are if you're investing in dividend stocks versus just putting something like the S&P 500, you're not going to make the same returns as just investing in the S&P 500. So keep that in mind. And then the next one is cash flow. So dividend stocks provide their returns on a regular basis. As noted above, most companies pay dividends on a quarterly basis. Most companies also try to make similar dividend payments, or at least try to base their dividend payments on a regular formula. This makes dividends a good strategy for investors who need a stable and predictable cash flow. So that means that unlike growth stocks, guys, when you're buying growth stocks, most companies there are a couple of growth companies that will pay dividends, but when they do, it's a very small portion of dividends, because those companies actually reinvest everything into their company to keep it growing, to keep their shareholders happy. Dividend stocks, if you're older, the cash flow, I know when you get older and you're getting ready to retire, you're looking for that cash flow. You don't really care so much about the gains. I mean, yeah, you do want some gains, but for the most part, you're looking for income so that you can actually survive in retirement, pay your bills, and maintain a certain lifestyle. So that's why a lot of older investors will choose dividend paying stocks as they get older, or transition from growth stocks to dividends as they get older. Hey guys, if you're enjoying this content, make sure you click that like button and give me a like so that I can know that you're liking this content. And also leave a comment below, guys. Let me know what you're liking about this video and if you'd like more content like this. So back to the video. So now let's look at the next thing, is time horizon, guys, because how much time you have to keep investing is going to make a huge difference on whether or not what type of investment is going to be right for you. So it says growth investing tends to be a longer term model of investment. Ideally, you will hold your stocks for several months, if not several years, while it gains value before you sell. This can lead to strong gains, but it means that you need to plan your portfolio and your liquidity around that time horizon. Dividend investing tends to be a shorter term model of investment. Since you are not trading a dividend stock for its long-term capital gains, you can move in and out of these investments fairly easy. So just like it says, guys, whenever you invest in growth stocks, you want time on your side. And that's why they say when you're younger, you want to make sure that you're investing most of your money, if not all your money, in growth stocks, because chances are you're going to have a longer time horizon and the returns will outdo a dividend portfolio. So make sure you take that into consideration. How much time do you have left? If you are like me, guys, you don't have, your time window isn't the same as somebody who's getting started at 20 or younger. But it doesn't mean that we don't have some time, because I always say that when you do start pulling your money out of the market to use it, you don't pull everything out at once. So you have more of a time frame than you'd like to believe. But you have to also consider that we don't have as much time frame as somebody who is younger. And then the next thing is, guys, it says the bottom line: dividend stocks are equities that pay you a steady rate of return based on the profits of the underlying company. Growth stocks emphasize capital gains, which returns based on the share price gaining value. So all that's saying is one focuses on income versus the other one focuses on capital gains. So now let me share with you guys what I'm doing. So I'm using both. As you know, I am trying to catch up for retirement. So I don't think that you have to use one or the other. There's really no set rule that you have to find out what's right for you. Me, I'm doing both. I am investing in growth stocks while I'm also trying to build some income and invest in or dividend income stocks. So the reason I'm doing this is because with the hopes that these growth stocks will profit or gain me a good amount of profit, that eventually as I get older, I can take the profits from those growth stocks and put them into dividend stocks. And then eventually the dividend stocks will pay me or help me pay for the lifestyle that I choose to live when I reach retirement. So that's the way that I'm using both. I'm using the gains to invest in my dividend growth stocks or my dividend stocks, and then using that money to fund my retirement. Now, if you are investing in dividend stocks right now, guys, even if you have a growth stock that does pay you dividends, you want to make sure that you are reinvesting right now the dividends back into that portfolio, whether it's an ETF, an individual stock, or whatever. You want to make sure that you're reinvesting those dividends back into that stock. That way it can continue buying portions of that stock and keep growing that portfolio with you. Once you reach the age of retirement and you're ready to start living off those dividends, then you can turn off the drip and start using those so that you can live off retirement. So anyway, guys, that's my goal, is to keep investing in growth stocks right now, take a big majority of my portion of the investments that I'm making and throw them into growth stocks. And then when the stock does actually start earning a profit, I'll pull some of those profits out and put them in dividends. That way my money is more secure, because as you know, I don't do bonds. I think that the most secure way for me to actually ensure that I have an income when I retire is to invest in dividend stocks. Now, I know dividends can be a little iffy too, because if the economy does go bad or we go into a recession, the company can always stop paying dividends. And that's why I don't recommend investing completely in individual stocks. You want to make sure that you're investing in dividend paying ETFs, because if one company stops paying dividends, then that ETF will probably self-cleanse itself and put another dividend paying stock in there. So that way you don't have to worry about focusing 100% on an individual stock and then losing all those dividends. Because if you invest in the right ETFs or the right companies as a dividend stock investor, when the time does come that you are ready to start using that money, chances are you won't have to sell that stock, because all you're going to do is live off those dividends, as long as the fundamentals of that company don't change and as long as the company continues to pay dividends. So anyway, guys, I just wanted to share with you guys the difference between dividend stocks and growth stocks and what I'm doing. Let me know down in the comments below, do you have one preference over the other? Are you investing just in one or the other, or are you doing both like me? Let me know your strategy below. And also, guys, if you enjoyed this video, give it a thumbs up. Click on that subscribe button so that you can be notified whenever I put out a new video. And until next time, guys, I will talk to you later. Have a great day. Bye.